Hello and welcome to another episode of Bell Financial Group's From the Helm series, live here at the ASX Mid-Cap Conference for this September 2025. I'm Grady Wulff, a Senior Market Analyst with Bell Financial Group. Bhagwan Marine, ASX BWN, is a national Australian marine services company providing a diverse range of marine solutions within ports, nearshore, offshore and subsea locations to industries including oil and gas, subsea, port, civil construction, renewables and defence. Today I'm thrilled to be joined by the company's Director of Finance, Andrew Wackett. Andrew, thank you for joining us today.
Thank you, Grady.
An exciting time for Bhagwan, especially given the small to mid-cap space and government defence spend around the world. For our investors who may not know the story of Bhagwan, can you tell us about the company?
Sure. So we're Australia's largest listed marine solutions provider, and we're a very diversified business operating across offshore energy, ports and nearshore, subsea, and defence. Defence is really an emerging sector for us, and our clients are all the leading energy companies in Australia, leading mining companies, also construction companies and a number of government agencies.
And now for FY25 was a really strong year for the company, including record net revenue, $283 million. That's quite a significant number. And record EBITDA, net cash from operations up 23%. These are really, really good results and increased profitability, paid down debt. You introduced a dividend. What a fantastic year. What were the key drivers in your opinion?
The key drivers undoubtedly are the strong market conditions we're experiencing. So across the oil and gas space, across decommissioning, we completed Australia's first and largest decommissioning project by an Australian company, and that was our largest project for the year. Also, very strong concentration on margins, on margin improvement across the business, and on cash generation. So it was a good year, but benefiting with some really strong tailwinds. And also the global vessel market is very short of vessels at the moment, and rates, global day rates are on the rise as well too, which is certainly helping.
Now, you did say that you work across different divisions and defence is an emerging division for you. What's the revenue split per division? Where are you seeing the highest growth opportunity right now?
So we're about offshore energy is our biggest vertical, and that's probably 60 to 70% of our revenue. And the highest growth opportunity within that is the decommissioning space. So these are oil and gas assets that are at the end of their useful life and they've got to be removed from the water. So the government's enforcing oil and gas companies to remove those structures from the water now. And there's a report that that's been out from the Centre of Decommissioning for Australia that says that's estimated that at a $60 billion liability for the industry. And so we're really at the start of that, and we're starting to see a number of opportunities come through for future work in that space.
Now, you did mention briefly before the rising day rates of vessels and quite a tight supply at the moment. How are you navigating this space and kind of working it towards your favour?
So look, it's an interesting market globally. So what's happened is that we've come out of the oil and gas downturn post-COVID. And there was a large overbuild of vessels going into that downturn. The industry's worked through that now, and now we're coming out the other side. There's a shortage of vessels. And the day rates, it's interesting, the day rates globally are actually too low still to introduce a volume of new builds, encourage new builds. And so we see an environment where probably for the next 3 to 5 years, we see a positive outlook for day rates. And we think day rates need to rise substantially from here before you'll see new builds. So we see vessels in short supply and a lot of demand across traditional energy, decommissioning, even wind farms, if one gets up in Australia eventually, and the defence industry. So we see lots of uses for our vessels and not much supply, in summary. So.
Definitely. Now, what strategies are in place to optimise vessel supply at the moment and maintain strong margins? As we know, margin appreciation is a big thing for investors in this day and age.
So look, firstly on the margins, we see a lot of opportunity to grow our margins, both through rate growth, but also through factors within our control internally, which is a lot of around efficiency. And as we've grown quite quickly, we need to do a bit of work on our operating efficiency, which we're doing now. And in terms of managing the vessels, they are getting harder to get, but one of the skills of the business is in sourcing vessels for jobs, and that's why we describe ourselves as a marine solutions provider rather than a vessel hire company. So we can get our hands on vessels, but it's getting more difficult. And I think over the medium term, it's going to get more difficult again.
So that's good for profit margin there.
It is.
What's driving your positive FY26 guidance that we've seen recently, and for pricing and utilisation, particularly for Barrow Islands and LNG projects that you mentioned?
Yeah, so we're seeing day rates continue to improve globally and in Australia. We're seeing lots of opportunities in our core markets as well. We're just very busy across Australia. And so that's a good thing. And like you said, with the Barrow Island, decommissioning has actually commenced on the island. And we see opportunities. All the stuff that's on the island, which is 50 plus years of accumulated kit, has got to come off. And to give your viewers some idea of the task, there's nearly 1,000 kilometres of road on the island. It's an A-class reserve. There's 900 nodding donkeys, the oil and gas production. They've all got to come off the island. There's nearly 1,000 kilometres of pipeline on the island. That's all got to come off the island and be transported back to shore by tug and barge or by landing craft. And that's where we come in.
And what are the goals for Bhagwan over the next 5 to 10 years?
I think it's to maintain our trajectory, to keep growing, to deploy larger vessels, move from smaller, medium vessels into the medium, larger vessels. We only operate 3 out of about 40 of those vessels in Australia. At the moment, we see opportunities to grow there. And I think to move into decommissioning defence and potentially make a few acquisitions along the way as well too. So they're really our targets for the next 5 years.
Sounds like some big things on the horizon. And what plans are in place to expand into new sectors? As you mentioned, defence is a new sector for you. Are there any other sectors that you're kind of targeting?
So there's defence. We have a base at the Henderson Marine Precinct in Western Australia where AUKUS is happening. So we're looking to monetise that asset. In offshore wind farms, if one happens off the coast of Victoria, we're very well positioned there in the Port of Victoria. And decommissioning is where we see the largest near-term opportunity, and we're really well positioned. We have all the equipment to do a lot of that work. We can certainly hire in specialist equipment as required, but that's the area where we really see the near-term growth.
And for investors who may be considering an investment in Bhagwan over the next 12 months, what can they expect on a news flow front, especially over FY26? So
on a news flow front, we see opportunities for contract wins, obviously. So we've just announced a $16 million project at the Port of Melbourne for beacon navigational aid replacement, beacon replacement. We've got several bids in for oil and gas companies for support vessels. We'd be hopeful to win some work there that's announceable. Obviously, we have an AGM coming up on the 29th of October. So we see plenty of announcements on the horizon.
Very exciting. Andrew Wackett, thank you so much for joining us today from Bhagwan Marine. I really hope you enjoyed that episode of From the Helm live here at the ASX Mid-Caps Conference. If you did, be sure to subscribe to our YouTube channel to stay up to date with all market commentary, insights, analysis, and exclusive CEO interviews just like this one.